Let's get started anyway. So today, we're going to talk about Tesla, the company, Tesla, the stock. It is December 12th. So we've got 2 weeks, a little bit more than 2 weeks, a couple days, 3 days more than 2 weeks. And the year has ended, 2023. Want to reflect back on 2023 looks like. And then let's look at Q1. I know, Alexandra, that you were looking very closely at AJ's numbers. AJ put together a very detailed explanation of what he's expecting for the Tesla margins. It could actually be low. He's projecting, I believe, 16%, a drop from 18% to even a little bit more for Q4, and then it should recover by Q1 of next year. So why don't we start with that, which is not that good news, but what did you interpret that to mean, Alexandra?
Okay, so I did go through his analysis, and he actually corrected it since he is now at 0.60 cents earnings per share. The market is around 66 cents, so it's lower than the market, and that's the number that will come out the third week of January. So the reasoning behind it is he thinks they are still throwing a lot of capex on Dojo and any other development, that research and development is still going to be high, despite the fact that some of it could now move to cost of goods sold for the Cybertruck. And he deducted that from the earnings call last time when Drew was particularly prudent. He also doesn't expect too much from energy this quarter. I'm not sure that on the energy I join him, because we got today one of the really encouraging tweets where they congratulated themselves to a certain milestone in the energy sector. And I was actually posting that middle of last week. Just here in Santa Barbara, they have installed 44 megapacks a couple of weeks ago. So energy could be the good surprise, but in his analysis, he didn't expect it to improve. And so given that he doesn't think lithium price decreases have already filtered through, because typically, remember, Elon told us it can take up to 6 months for them to see those cost reductions really filtered through advanced contract negotiations. So all in all, he was rather negative, and I want to stay on the prudent side as well. I just think we've had a tough year. It is really as if Tesla is riding multiple waves at the same time. We're riding the EV adoption rate. We're having Y now as the best sold vehicle in the world. Model 3 in China I found is a little bit disappointing, but it probably is because there's so much exporting. I do expect loads of Model 3s in Europe in the next 2-3 months. So the EV wave is sort of moving, but not as steep as we'd anticipated it. The Cybertruck came a little bit late, and the ramp, maybe we'll get to 100,000 next year, but maybe not. And so that ramp is a little bit slow. And they started, obviously, Dojo probably earlier and more massive than they anticipated it. So we're in this sandwich between once already being a cash machine, but not really enough to have this massive money thrown at Dojo. So free cash flow is going to be one of the key elements we're going to watch when we see those numbers in 5 weeks. And I just want everybody to be prudent. This is not the moment to be in margin. This is not the moment to play options for the next 5-6 weeks. I really discourage people to do that.
Yeah. Okay. Well, that's a good warning for folks that Q4 of 2023, the reports will be published on the third week of January. And right now, the expectation is that the margins will be flat or maybe even a little lower. The question is whether or not the market has already built that in, and they're looking forward, right? Last time I spoke to Jeff, he was saying market is always forward-looking. They're already looking at the Cybertruck is getting very good reception, the potential macro improvement that's coming, and so forth. But you're right, the Q4 numbers will likely be flat or lower. And so just be careful what might happen there. Jeff, what do you think? Do you think the market will already have that built in, or will it be a surprise?
It's really hard, I think, to predict short-term market movements. But yeah, like you said, or I think I said as well, markets are forward-looking, and there's some key questions that need to be answered. I mean, if you look at just EV adoption growth, when I've looked at it historically, this is, I think, some new information for people. If you look at it quarter to quarter, there are quarter to quarter movements in history that show a drop off in EV adoption. But then when you take that and you look at it annualized, you look at it over 2 years, it's still going rather significantly up and to the right. So we live in these news cycles where we just like constantly like pound the same thing like over and over. And right now fintech is in this news cycle of, EV adoption is, quote unquote slowing. Nobody wants EVs. But this could just be that one quarter here that, first off, it's significantly higher. Like this time last year in the US, it was 5% adoption. Now we're at 8%. So that's a significant move. But yeah, inter-quarter or like quarter on quarter, there may be, we don't have 70% EV adoption growth. We have 40% EV adoption growth. I would just be very careful with looking at it quarter on quarter, because when I stretch that out historically, it kind of catches up and is still going up and to the right. And it was doing that historically when EVs were much, much, much more expensive than they are today. So I would anticipate that, we're going to continue to see a very good clip of EV adoption. So the question I have for going into the next year is, first of all, Tesla somewhat understates their capacity that's installed. We've seen, what they put in for Shanghai and what they're actually able to do. If you look at the November numbers. And the question is for next year, where do they see, EV adoption, and where does the market see EV adoption happening? And then finally, you just do the math. And, we're at 8% adoption in the US now. Let's say it goes to modestly like 10%, or if it goes to 12% adoption on, 15 million cars in the US, or 16 million, I think is the current SAR. If you just say it's going to be flat in a declining interest rate environment, you're up at 1.9 million EVs. You're going to go from 1.2 or 3 million this year to 1.9 in the US. So who's going to make those EVs? Ford just cut their F-150 capacity in half. GM has capitulated on capacity. Nobody's answered this question for me. It's either the EV adoption we're not going to get, a bigger move up in EV adoption next year, or we are, and someone's got to build that out. And Tesla's the only company that's actually net adding capacity in a meaningful way in the US. So I think there's some unanswered questions. I don't think anybody understands how to model that declining interest rate environment. Like, when is that going to start? Is it going to have a meaningful impact next year? Have we effectively modeled 7,500 off an invoice in the US? I don't know. I don't know the answer to those questions. I just think right now the media is in this cycle of pounding, EV adoption slowing, but literally in less than 3 weeks, a 3 or a Y is going to be, 15% or more cheaper at point of sale. You're going to wake up and Tesla's not going to need to do a price change. Tesla may actually have to increase prices, as you've seen them doing in China. So I think I'm not all doom and gloom here. I think there's a lot of moving parts here for Q4. I haven't walked through the numbers myself yet to kind of see where it's going to land. But when you push volume up 10 to 15% quarter on quarter, that's a pretty good movement. So we're gonna have to see where inventory falls and where everything else is situated. But I'm pretty bullish, kind of looking forward, looking ahead. And finally, just on the stock price itself, I'm not great at predicting near-term movements, but the biggest thing that would move the stock is positive sentiment from Elon, the CEO. He's kept a lid on it for the last three quarters actually with kind of his sentiment. So obviously greater earnings would move the stock up, but also kind of his sentiment on earnings and forward guidance, I think, are the two things that kind of are keeping near-term lid on for now.
Thanks, Jeff. So welcome to Omar, K-Tam, Sat, and maybe we should invite Elon to the space. So with Omar and K-Tan here, the OG, that he might just actually join. So guys, we've been talking about Q4. The expectation is going to be fairly flat. In fact, some calculations are showing that the margins might actually be, maybe even a little bit lower than the Q3. But we just had, kind of news. Sawyer broke another news just about an hour ago that Tesla obtained the final permits to start construction of Giga Mexico plant. So even though that they have finally the ability to do this, Omar, do you think that they will, actually break ground in Q1, or just like Elon said, he's going to stick and wait it out until it's finally time to really put more money into this? What do you think, Omar?
I'm not sure when they'll start production, but they have a ton of room in Austin. I think it makes sense as a place to start ramping the next gen vehicle, but construction's also probably going to take some time. It's probably going to take, at least a year or two. So I'd expect them to get started hopefully sometime in early 2024.
What do you think in K-Tan? Are you excited about Q1 and 20? What's your perspective? What happened in 2023? Were you expecting this?
Do you mean for Giga Mexico? What do you mean?
No, just in general, everything. I'm still in PTSD.
Yeah. There's so much that is going to happen. People are speculating when then the refreshed 3 will get here. I hear people saying late 2024. It could be earlier than that. Giga Mexico, I think a lot of us wanted to see it move faster, but I really think that when they shared about that, I think it was just because they needed something to get the shareholders excited. So I think it's probably going to start moving at a faster pace now.
Okay, and Gary just joined, so let me ask him this question. That you got a great tweet or post. You were saying that here's Tony Sacconaghi. Oh, jeez, I just said his name properly a little bit earlier, and Sacconaghi, and he's being bearish, and he's saying, hey, next year. In fact, he actually is going to short Tesla for 2024. You explained the difference between a bear and a bull, and how we're looking at 2024. You want to share that?
Well, I've known Tony many years. I used to work with him. He's a very good analyst. He's been wrong, but he's very disciplined about using facts and figures to support his analysis. And he's probably the only bear that hedge funds and institutions take seriously. They don't listen to Gordon Johnson. They don't listen to the guy at J.P. Morgan. But Tony makes a good living on Tesla commissions, so you got to take him seriously, because they know a lot of institutions take him seriously. I guess the way I'm looking at it for the rest of the year is I think they can deliver the 476K of volume. I think that the street is looking for, so I think that's fine. I think the next data point will be, as you pointed out, what are gross margins for the fourth quarter? I'm looking for about 16, which is about the same as third quarter. And then we'll start thinking about 2024. What's going to be the volume guide? They don't guide when the deliveries come out. They guide when the earnings come out. So around the 24th, we'll probably get a volume guide for 2024. And, they're showing installed capacity of 2.35 million. And they're, at least in China, they're doing a lot more than that. So I think it's probably going to be closer to 2.4 as a guide, which will be above where the street is. The street's at 2.2. So as you get into next year, you got, obviously the Cybertruck halo effect. You got the Model 3 Highland. You got the $7,500 off invoice, starting January 1st, which could be huge. And then people will start talking about the $25,000 vehicle. We'll start hearing about, production maybe coming out, late 24, early 25, and that'll get people excited. So I think 24 will be a good year.
Okay, I want to do a vote on the panel here. Who here thinks that they're gonna Tesla will actually do a reveal event for the compact car, $25,000 car, and who thinks that they won't do it until just a few months before the actual production?
So are we going to raise our hands for one, then the other?
No, but just go through everybody say yes or no.
And you mean a reveal in 2024?
Well, I don't know the date, right? But just will they do a product reveal separate from the actual, launch? Like,
I mean, one
let's
thing
say
I
here's
can
a
say that
yeah.
Jeff was saying about the quarter over quarter or year over year outlook is that I'm kind of glad that Elon's not being too excited. But the thing is, like, when he was, people would criticize him for being too enthusiastic and say he's detached from reality. And now he's kind of being a little more, rougher, like economy, all this other more depressive kind of news. And then people are like saying, why aren't you a bit more enthusiastic? So I feel like there's no win whenever he says anything, but I'd rather have him be a little more conservative. But internally, they're probably shooting for something much bigger. And I think, you take a year ago, it's 2 years ago, it's negative 28% for the stock. And then 1 year is 35% positive, right? So, and then you take 5 years, it's 890% gain. So, like, depending on how you look at it and what trajectory you have, you can always argue something about the stock price in relation to what Elon says. But I think, Tesla's going to grow, and Elon being a little more conservative because the economic times that we're in right now, with so many wars and all this other interest rate issues, I think it's smarter to be saying that kind of stuff rather than being too overly enthusiastic.
So who actually agrees with Sat that is Elon actually sandbagging these days? He's changed his behavior.
I don't think he's sandbagging, but I do think with the $25,000 vehicle, he's going to wait till it's right before it's ready to produce, because you don't want an Osborne Model 3. Model 3, it's after the most recent price cuts, you can get them for under $40,000. And, who knows what the model, we'll call the Model 2, even though that's not what it's going to be called, how big it's going to be. But I don't think there's any benefit to them announcing it early like they normally do, a year or two in advance. I think it's better to just wait till right before, and then, right before you're ready to produce it, and then go as fast as possible to produce a lot, because there's going to be huge demand for it, and you don't want to cannibalize in Model 3.
Yeah, I don't think they're going to do a reveal far in advance. I don't think that serves a purpose. I think the closer they are to the product actually shipping, probably the better, so they can nail the cost, the specs, and everything associated with it. Yeah, and I'm not looking for Elon to be overly bipolar, like in one direction or another. I'm kind of just I would take even keel would be great, and kind of like, here's our plan for success, versus overly enthusiastic or depressive, like in the other extreme. So and the other thing is, like, Tesla's has to then put up the numbers and meet them or beat them, and kind of get out of this it's kind of in this downtrend in terms of EPS performance. And I think the analysts tend to overshoot in both directions. I think we were flying high a couple of years ago, and $6 or $7 for last year, and then all of a sudden we're less than half. And I think we may be overshooting to the other side too. But you've got to be able to put the numbers up and see if they do guide to something around 2.4, I think that would be very well received for 2024. I could see them doing kind of a goalpost thing again, though, of like, here's our commitment, and here's kind of the upper bounds of that. I could see them doing that. And then the other thing is, there's still a lot of areas in the world that just haven't seen EV adoption yet, whether it's a charging infrastructure issue, whether it's just purely a distribution issue. So there's just a lot more expansion. I don't think people understand like where we are and like in terms of like global expansion of EVs. I've rolled out other product lines in my history, and it takes years, many years sometimes, to reach all the countries and get product in the full distribution. And EVs are nowhere near full distribution. So there's a great kind of plan ahead, I think, for EVs. And just this pullback in VW, Ford, GM, I just don't know how they, and maybe that's where we take the topic eventually, Herbert, is just what does it look like a couple of years from now if they decide to re-enter. I just don't think they can come back and re-enter, the way they were. I don't think you get the scale that way. It's almost like, there need to be partnerships created or something. I think, this outreach to the Chinese vendors, I don't see that actually working out very well. I see that being highly inefficient. And, I've seen this as well in history not work out well. It's kind of like you're still on this downtrend, even though you may get some momentary, bursts. But in general, it's kind of like a race to the bottom when you're doing that versus like organically creating great products. So anyway, those are my thoughts on 24 and maybe beyond.
I think that there will be an unveil at some point. I mean, it kind of I think what Jeff was saying, it does bring momentum. And I think, for the markets in South America, all the way down to Brazil, and like we've got, they want to hit parts of Europe and they want to hit China. And China supposedly is making its own little version, and maybe it has its own unveil. I think maybe towards the ending of or the culmination of Giga Mexico finalizing, I think we probably would see an unveil, but that's just my take. And I think the momentum does need to be built a little bit because, like Jeff is saying, like people in these countries need to think about this little car that they're going to get, and they're going to think about where they're going to charge it and everything like that. It's just not going to be rolling off the factory lines and like, take one if you want one. I think it's going to have to build a little bit more momentum.
And I agree with that, Kirsten. And I actually don't think there will be an Osborne effect between the two cars, because I don't believe at all that the 25,000 car, the compact car, is comparable to the Model 3. People that want the Model 3 are not, in my view, the competitor with the compact car. And don't forget, the compact car will also be the basis for other larger models like the van. Don't forget, they're going to be building it in Shanghai, in Berlin, in Mexico, after having tested it in the production line in Austin. So I'm quite certain that once Austin has the model and the production line in place, we'll have a similar event that we had now. Also to see exactly how big the demand is going to be. And I think it's going to be outrageously huge, and it will be a worldwide demand and a worldwide launch. I do believe this will be the first car where they really launch it in all three continents at the same time.
Yeah, I love that, Alexandra, because Jeff had brought that to my attention.
I think the people are real excited about Cybertruck and its innovations. But if you've been to Asia or Europe, the Gen 3 car, $25,000 car, is going to be crazy. It's going to be perfect for it. That's why the Model 3 is considered still a large car. But people look at it from the North America point of view, so they don't understand that the smaller car is actually it's a necessity, because you can't have a huge car on these smaller roads. And the infrastructure isn't quite there yet. And that's the other part too. Like if you're in California, you don't have to even think about it. I don't think about supercharging. But in other parts, even within the States, there needs to be more charging. So within a couple of years, by the time the Gen 3 is announced and it's going to be in production, it's going to be a whole different level that Tesla's going to be taking the EV production. So I think even now that people are excited, like I think when the Gen 3 platform comes around, it's going to take off to a whole different level. And I don't think people understand that unless they're actually in those markets where there's infrastructure barriers. Like there was a parking structure in Japan, and there's 2 EV chargers. They're both broken. They're not Tesla superchargers. So there's a consistency where it's like non-Tesla infrastructure is not quite up to par even to maintain the services.
Okay, so I actually agree that I think that there will be a reveal, but something that Jeff said a couple of weeks ago, I've been thinking about, which is for the Gen 3 specifically, the compact car, $25,000 car, it has to have really good margins. It's got to be priced really low. In order to do that, you can't export this. Wherever you build it, that's where you're going to sell it. Because if you have to take into account the additional dollars for the export fees, transportation fees, then it doesn't make sense for the margin. And so in this case, would they, as many people have been saying, use multiple factories at the same time and then do a big reveal and then do a big launch? Because in order for Gen 3 to work, you need to have massive volumes being sold at the same time. Omar, what's your thoughts on the compact car? Everything we've learned in the last several months, I haven't heard I haven't been listening to you in other spaces recently, so I'd love to hear if you have thoughts on the Gen 3.
Yeah, I think when you look at the trajectory of Tesla's growth, it's really driven by expansion into new segments. So the Model 3 Y platform was one such event. It was an inflection point in the company. The next gen vehicle is going to be a similar type of event. The Cybertruck is really kind of an extension of the 3 and Y platform in many ways, but it's really driven by these new vehicle introductions. So I think the timing of the next gen platform is going to be really important. If you want to know, is the growth trajectory of Tesla in check, what's important isn't, do Model Y sales grow 25 or 30%? What's more important is how soon are they going to get this out into production? In terms of multiple simultaneous launches, that seems kind of unlikely to me. Tesla tends to like to set up a production line clean sheet, learn from their mistakes, and then launch an improved version of the production line, continue to scale. I mean, I think they can export it just like any other car. Obviously, making it locally makes sense. They've announced Mexico as a location, they've announced Berlin as a location. So I would expect it to probably come to Austin first and maybe move to Berlin shortly thereafter. And the Asia location, I mean, if I had to pick one location to go first, I'd say the Asia location, hands down. Just because, I mean, you look at where Tesla's positioned right now, it's kind of incredible. You look at the best selling EVs in China, Model Y is the best selling BEV. But then you start looking at the prices of those vehicles, it's just insane. They're so much higher priced, and yet they're still the best selling BEV. If they actually got a product out that was about half the cost, I mean, it would just be game over for some of these other players at the lower end of the segment. So I think Asia's probably number one, the most important market. Then Europe will probably be really popular there as well due to the layout of the cities. But I think they had said they're going to start it in Austin. They do have a bunch of factories and the engineers there. So I'd probably expect them to start with one location and then add on the other shortly thereafter.
Yeah, somebody told me that in their when they were touring the Giga Texas because of the Cybertruck, that they saw that there was a Tom Drew there, of course, and lots of the employees from Giga Shanghai. So obviously helping, but also absorbing and getting
Also
center.
from Berlin. Also from Berlin. I had, by pure coincidence, the hotel where Jeff and me stayed, and a couple of other people that are in this chat actually. We had a crew from Tesla there at the breakfast, and then also a couple of times in the elevators, and they all came from Berlin. They had arrived 4 weeks early to get the production line into demo mode and all that. And I mean, obviously, I needed to chat, you know me. So what I sort of understood is that they will still stay another week and that they're looking at other production lines before going back to Berlin.
Nosy, Alexandra. Go ahead, Xander.
I would do that.
Yeah, so thinking through what Omar was saying and talking through the timeline, do we really like, is everything lining up for like what, a mid 25 start of production in Austin? That would be Mexico, right? So are we gonna wait until 25 to launch the production if the line is ready and the design is done in Austin, and like you saw, Shanghai's expanding. So what are the, can we iron that out on what everyone thinks?
I think Ron Barron had given an interview where he said about 18 months or something. So that would put it into 2025. I thought that sounded kind of aggressive, but maybe he's been talking to Martin or others, and that sounds about right. So we'll have to see. I mean, it's a little bit of a head scratcher because in the past, Tesla has typically unveiled these new vehicles several years before the start of production. Presumably, they'd want to show us what this vehicle looks like in 2024 before it went into production, and maybe they could start taking pre orders. Or maybe they don't want to do that this time. Like Gary said, maybe cannibalization is a concern. So we'll have to see. But presumably showing off the vehicle or giving us some better sense of what that final product is going to look like would happen before they really got into setting up the production line.
Go ahead, Emmett. Emmett, are you there?
I'm here, but I guess there was
Can't
an
hear
issue
you.
with my mic. Can you hear me now?
We can hear you now, as long as you weren't
Yes.
in the washroom.
Herbert, can you hear me, or should I reconnect?
I can hear
We
you.
hear you.
Can you hear us? You should reconnect then.
Okay, I'm gonna start speaking then.
Wait.
Go ahead.
The Xander, I really like your question, and the key thing to me are two milestones. One is that Cybertruck is running smoothly and deliveries are happening smoothly and things are looking really good. And that's likely to happen the later part of 2024 and just get better and better in 2025. So that's what I think is going on with Cybertruck. Of Gen 4, I think the most important thing is that the production line is ready, material supply, the supply chain, and all that stuff is ready. And it seems like 2025 is realistic for that to happen. I think 2024 is too optimistic. Because the markets are so different, as long as from a manufacturing standpoint, Tesla can handle the ramp up of the Cybertruck and the rollout and ramp up of Gen 4, I don't have any issues with them both hitting that stride and eventually reaching mass volumes in parallel.
Okay. Well, it sounds like the group is a little bit down a bit. we should be very, very excited, right? Because we had the Cybertruck very, very successful as everything's coming out to be. The Model 3 Highland is also very well received, of course. We just got the announcement that Giga Mexico has approval to move forward. You've heard that they're actually improving much faster than we realized. The production line is being, planned out for the Gen 3 platform. We had an amazing interview by Sandy Monroe, and they just shared, and Elon is so excited about this new unboxed model, even maybe more, this production line. And so the halo effect that Gary has been talking about for the Cybertruck looks like it's actually happening. The Google searches, and so shockingly, China, of all places, had the most searches for Cybertruck and for Tesla when the Cybertruck was launched. So just the world is looking at Tesla. So, and then macro, I mean, we are expecting, China's going through deflation, so that could be a concern, big concern for China being one of the big markets for Tesla. But, on the other side of the pond here, we're going to see interest rates getting cut. And so things are turning around in terms of the macro. And I think today was a very special day because I heard that it's the first time where all the Magnificent Seven fell, but the S&P went up. And so that means that, all the other companies are still to be more optimism that way. Gary, what's your thinking for 2024?
I think the market's going to be strong as long as the Fed does what it should do, which is cut rates. And, GDP estimates for fourth quarter are like 1%. What the Fed wants to do is, land this economy, in a place where it's not going to go into recession. So they're hoping for this magical soft landing. We'll see if they, talk about it tomorrow. But as long as they can bring rates down starting in, somewhere between March and May, I think they can navigate a soft landing without throwing us into recession. And if that happens, then, that's good for markets. It's good for growth stocks like Tesla because, as rates come down, they're long duration assets that are worth more as interest rates that you use to discount the earnings stream fall, it's worth more. So I'm optimistic, that as long as the Fed doesn't screw up here and, hold rates up higher for too long, we should have a good market for next year. Now, the one thing I worry about, Powell will probably talk tough tomorrow, and he probably will not start talking about cutting rates until right before they do cut rates, just the way they do things. And so I hope it doesn't scare everybody if he talks tough again tomorrow that, they need to be vigilant about inflation and, it's stubborn coming down. I mean, he can use all kinds of words. The inflation number today, the CPI number today is being stubborn. It was, 3% overall, 3.1% overall. It was 4%, on a core basis. That's still stubbornly high. So, he may take the opportunity tomorrow during the press conference. There'll be a new dot plot, as they call it, tomorrow. But remember, a dot plot, they don't look at specific months. They'll say 23, 24, 25. So by the end of 24, you'll see dots come down. But my guess is, he'll probably resist talking about cutting rates unless he surprises everybody. I don't think anybody expects him to do that. But I do believe they will cut rates next year between March and May. I think it's about a 50% chance now. March, I think it's over 50 before May. And there's one other thing, Herbert, that I wanted to just bring up. So, Elon in the past has been, and you got to go back to the fourth quarter of, I guess it was 22, so it was January 22, when somebody asked him about the $25,000 car. And, he basically said, we have too much on our plate right now. And, at some point we'll bring it out. But, he was focused on an autonomous car, and he really didn't want to bring out a $25,000 car with pedals and steering wheel. And so there's always a lurking question in the back of my mind. Does he really want to do this? Because, it has taken a while. When he was asked about it 2 years ago, he was kind of lukewarm about it. I think we as investors would love to see it because you're bringing the Tesla brand into the mass market TAM, which is huge. And I agree with everybody. It's going to be a huge monster product when it comes out. I just hope Elon, is as focused on it as we investors want him to be, because in the past he's been kind of lukewarm about it.
Yeah, I mean, I don't think that it was really about autonomy at all. I think what they communicated on the earnings calls at that time was really that there was basically a massive supply chain issue. There was a chip shortage. There was part shortages of a lot of key components. And it didn't make sense to bring a new vehicle to market, let alone a vehicle that's supposed to be the low cost vehicle at a time of such massive inflation in the car market. I mean, we all remember what happened. Cybertruck and other vehicles got put on the back burner as well. And we all know he loves the Cybertruck. He said, I wish I could get it out sooner. But they kind of just had to prioritize keeping Model 3 and Y in production and making the changes needed, securing new suppliers to keep those vehicles growing. So I don't think their commitment ever really wavered to it, but their prioritization as a company during the chip shortage shifted away from new vehicles to just maintaining their existing vehicle growth. But I think that's started to change now. We're now seeing the Cybertruck come to the market. The shift is moving back to new vehicle introductions as well.
Yeah, I agree. I don't think this narrative of Elon doesn't want to put it out is quite accurate. And I'm not trying to put words in your mouth, but I think it's really important to think about what happened when Tesla wasn't able to produce cars at scale with the 3 or the Y, and now you have multiple factories that can hopefully, you need Mexico, you need Shanghai, if you're going to sell such a high volume vehicle.
I think it's really just insane that you have a Model 3 right now that's in inventory if you have inventory near you for $35,000. With the $7,500 federal credit, if you want to include that, it gets you under $30,000. If you want to include fuel savings, it's really similar to a $25,000 gas car. That's not, in 2 years when the next gen platform comes out, that's now. When the next gen vehicle comes out at 25K base, if the full tax credit is still there, you could have a sub $20,000 vehicle. So it really just is insane. And I know it's been a painful year for investors because people aren't seeing the earnings growth. They're not seeing where it's going to come from with vehicle prices coming down. But I really do believe, you look at the search traffic. So I see Sawyer in the crowd. He just posted that tweet today. He said, look at Tesla. They've overtaken Ford now in search interest. There's been a big change in 2022. And I think the affordability is really changing the way people look at these products. But meanwhile, you got Cybertruck. I mean, Tesla still has the ability to bring out these premium vehicles and charge $100,000 for them. And that's really interesting to see. But they're now just really an incredibly compelling mass market option. I mean, who would buy a Camry or something like that when you have deals and incentives like these on a Model 3?
And Tesla's the only manufacturer that's focused on affordability. It's a priority for them. No one else is talking that way.
That's true. The only problem is, and again, I'm going to be the naysayer here. People don't know about it. They don't communicate it, and I think they're hopeful that people find out about it. But you're right. You can get a Model 3 with the tax credit for $27,500 now. But the average person doesn't realize that. The average person still thinks Tesla's a $50,000 car. So somehow there's got to be some narrative that gets out there that says it's affordable.
But Gary, did you listen to Elon this Sunday when he had this space with all these political actors? How passionate he became when he talked about PR and propaganda, and the last thing he would like to do is entertain that. I just think, if we dream of TV ads or anything like that, that's just a no-go, and we'll just never get there.
Look, I'm not a big fan of TV ads either, but there's a way to communicate with ICE owners about how cheap a Tesla Model 3 is. As Omar said, it's $27,500, and with fuel savings, it's $25,000. Elon may not believe in PR advertising, which was clear from his discussion on Sunday, but he also, on the other hand, says, well, we're going to be as big as Apple, market cap. Well, the reason Apple is so strong is because Apple was very good at communicating with its customers why you should buy an iPhone. And there has to be, even if Elon doesn't want to do it, there has to be some skill set within Tesla that gets this message out to ICE owners how cheap a Tesla cost. And I mean, it's not going to just happen through osmosis or through Twitter. It's got to be somehow conveyed, to the masses that, hey, you can buy a Tesla today for $27,000 after the tax credit. Look, 2 weeks, this thing's going to be off invoice. So it's going to be $27,500. Where's the, I don't want to call it ad campaign, because I know it's a dirty word, but where's the communication strategy to get that out there? I just don't know.
Yeah, I mean, we have seen them kind of dip their toes in advertising. They did some Google ads, some YouTube ads. There is, of course, word of mouth getting out over time, but yeah, there probably isn't as much awareness as there should be. Maybe they could do more. Maybe they need some new strategies. But I think part of it is just sort of the economic gravity of the situation. As rates come down, as things improve, as fuel prices are going down and the cost of living is going down for consumers, and they sort of work off that really expensive, overpriced dealer markup car they bought during the pandemic, people will return to the car market. And I'm betting there's a lot of consumers right now who aren't in the market for a new car, but are looking at these prices and thinking, when I get back into the market, when my lease ends or whatever, this is what I'm going to go with. I mean, we have a huge affordability problem in the broader car market right now. And really what they're providing is just what the market needs in many ways. People are looking for low cost options, and they have them.
Yeah, I think with the January 1st 7,500 off invoice, they're probably going to wait till closer to that point. I think it's a valid question of like, how are they going to increase awareness when that point in time comes? They probably just don't want to freeze up, December sales until then. And there's an interesting thing going on, and maybe it's a great question for the panel too. Is just how right now fintech and the media are kind of pushing this narrative of like, hey, hybrids are pretty good, because I think the automakers have told them like, this is what we can build and make money on. And you saw Ford, cut their F-150 production in half, and their stock went up today. And that is upside down world. What a year ago, if an auto manufacturer announced an EV product or that they were adding capacity, their stock went up. And now those same manufacturers are announcing that they're cutting their EV capacity, and now their stock goes up. So that narrative has flipped, and it will diminish it may have some diminishing value to EVs until that narrative flips back in the other direction. So I don't know if anybody's got any thoughts or ideas on that, and how that transition to happen, and how to kind of put that genie back in the bottle.
Jeff, I completely agree with your observation. I do want to call out that there is a very logical reason why Ford and other companies are cutting their production volumes. They're still in that horrible part of the ramp curve where every car they make, every truck they make, costs them money. So by cutting their production in half, they've reduced half of their burn or their bleeding. So I think that's why the stock went up. And in terms of when I think it's going to start to turn around, Gary spoke to it earlier. Second quarter next year, most likely, the interest rates are going to start coming down, and it'll be a lot easier for the manufacturers to have 0 interest or 2% interest deals to spark that interest again. And the big challenge for them is going to be able to ramp up. So like for 12 months that they finally can reach true break even and then become profitable again. That's their challenge. All that's going on for Tesla is that we're just getting a massive head start. It's like we've got like a year and a half additional bonus because of all the hardship the other manufacturers are going through in terms of a lead.
And what happens when they do get back, when F-150 increases their production, if they ever do? By that point, Cybertruck margins will be so much better. They may lower prices at that point, and the product is so good features-wise. I don't know how anybody ever catches up anymore. It's that whole reason why Lucid is struggling so hard. Tesla came in with a high-end premium Roadster Model S, but now when Lucid's coming in with this high-end car, you've got Model S. You're competing with that. It can't. It's a different competitive market.
I'd like to speak directly to that, and I'm one of the few people I think here that lives in rural America by choice. Even though I grew up in the suburbs of Seattle, an area called Bellevue, I now have chosen to live in the rural area. Truck buyers are generationally connected to Ford and Chevy, like 5-6 generations. And I could also say Chrysler, but I'm not, because they're not an American company anymore. And because of that, what I personally believe, and I believe this with my whole heart and soul, Tesla will reach 1 million Cybertrucks a year, and that'll include a lot of rear-wheel drive only that'll be owned by utilities and different businesses that need work trucks, and they don't need it to four-wheel or any of that kind of stuff. They just need it to be tough, to have a very low cost of ownership, and need minimal repairs. And the Cybertruck rear wheel is going to be fantastic for that. Okay, so Cybertruck's selling 1 million a year. I think the F-150 will continue to sell 1 million a year. I think Chevy will survive maybe a fraction of what the company is now, but maybe 250 to 500 units a year, because I just don't think they're going to be cost effective in comparison. And I expect Rivian to be significant, probably as large as Range Rover is. So I think that's going to be that way for as long as Americans are buying trucks. I don't think Ford's going to go anywhere as long as they can survive the transition. I think 1 million or so Ford F-150s will continue to be sold just because of that loyalty, and they are fantastic trucks.
Only 600,000 F-150s were sold in 2022.
Right, but you're saying 150, but it's the entire F series, the 250 and the 350, and some of the other knockoffs. I'm kind of putting that all in the umbrella when I say 1 million.
Since we have Omar, K10, Sawyer here, they're the OGs that fought off the Tesla Q. But now, do you guys think that there's going to be a massive push by the legacy automakers to discredit electric vehicles, or do you think that this is already won, and it's really about education of Tesla versus fighting the fight? I think we're just at the beginning, right? We're going to see mainstream media just up the ante. Oil, as they start to feeling that they're going to die, they already start to up the ante. And then the legacy, now that they're pushing back, they're going to be pushing hybrids and pushing down electric vehicles. What do you think, Omar, K10?
To be frank, I don't think we're going to see just these little petty Tesla Q accounts. I think we're seeing it right now. Like the commissioner, the director of the FCC, just put out a statement that he dissented against, the Biden administration going after Elon and pulling back the funding for Starlink. I think we're going to see it in a bigger case like that. I don't think it's going to be just these little guys on Twitter anymore. I think we're going to see it around the back end. So.
Yeah, I think there definitely is a huge pushback against EVs. They've now reached a scale, especially with Tesla cutting their prices this year, that's material. So people are getting very concerned, and some of it doesn't even have to do with Tesla. For example, a big battle that's going on right now is the corporate average fuel economy standards that the Biden administration is proposing. With their, I think it's 2027 to 2032 target of something like 53 miles per gallon, critics are saying it would essentially be an EV mandate, even though it doesn't say it has to be EV. It could be a hybrid or some new type of super efficient gas engine. It would essentially make gas cars a lot more expensive to make. It would essentially force them to make more EVs. So there's a lot of pushback right now. There's a desire to push a narrative that consumers aren't liking EVs, the technology isn't there yet, and that hybrid may actually be a better option, to try and delay some of these regulations, to push them back, and just to win over consumers in the marketplace as well, as EVs continue to be the fastest growing vehicle segment and the best selling vehicle in the world this year.
I think Ford's going to have a tough go at it next year in terms of EVs, because not only are they cutting Lightning output by 50%, but the Mach-E won't qualify for any federal EV tax credit anymore starting January 1st. And in general, we're sort of seeing a big shift in EV strategy from many legacy automakers. Honda just today announced they're discontinuing their Honda EV that they launched 3 years ago in Europe. So I think Tesla really needs to take advantage of this strong competitive position that they're in heading into 2024, and they need to educate people better on the low cost of their EVs, the safety of their vehicles, and just the benefits in general of owning an EV, because there are way too many people out there that have no clue how inexpensive Teslas have become over the last year or so.
Alexander,
Yeah,
do you
I
want
think Gary's been saying a lot. Tesla's the only real profitable company in this game in the world. The only other is arguably BYD, and they're really using the plug-in hybrids, which of course have gas engines, to really achieve what they've achieved there, I think, and their margins are pretty slim. So really, Tesla's the only profitable EV maker at scale. The competitors are, and if you believe that the EV transition's happening and you look at the data, it is, and it's happening fast. There's the startups which are just blowing up. There's the legacy automakers that are pulling back. And then there's Tesla that is now able to sell a $35,000 Model 3 and still make a profit.
I think you're underestimating BYD, Omar. They have come out now with segregated car margins, and their car margins are actually quite high, higher than Tesla's last quarter. And they don't separate them yet between hybrids and EVs, but they obviously only do now hybrids and EVs. So and they may have higher cost and lower margins once they really go into Europe. There's a lot of issues about transportation. There's just not enough ships in China, and in Europe then there is not enough distribution centers. So it's not all rosy, but it is much higher than I would have thought a year ago, now that they're segregating the results.
Yeah, that's actually, this is Atul. This is true.
Hi, Atul.
Hi. So there, BYD, and also keep an eye on Hyundai. These are the only three companies who continue to dedicate resources on the EV side. What BYD is doing very cleverly is actually, if you plot their pricing, it's below 200,000 RMB, which is where Tesla is not playing. So for most of their business, they have actually priced themselves below, very different price positioning for them. What I have been wondering is, how do Americans actually buy? I mean, obviously, it's 15 million people buy cars every year, but it's a big ticket item. Don't they do a simple Google search while looking at the pricing of a product? If they hear about, if 1/3 of the people want to buy EV, I mean, that's a very large number. Don't they even look at, like, Google search what price is Tesla Model 3? How do they buy a big ticket item like that?
Have you been to a Thanksgiving dinner recently?
I mean, I can only witness what I did, which is obviously anecdotal. So last Saturday, I was going with friends who bought a Tesla, and they would have not considered a Tesla if I hadn't told them about the price. So we went then to the Tesla store, which was in Santa Barbara, which was packed. I've never seen it as packed, and I'm going there a lot. They had a Model 3 and a Model Y on display. People tried them out. I would say about 80% went then for the Model Y. It's just the bigger car, if you have kids, whatever. There's good reasons why people prefer the Model Y to the Model 3. But there were Model 3 buyers as well. And obviously nobody was discouraged or had even a clue that there was a Highland model coming in a couple of months. I don't think that was that at all. Lots of flyers within the showroom about the 7,500 tax credit ending. Very good offers on leases. So lots of those people signed up for leases. I was hanging around much longer than I should have, just because I wanted to see what was going on. But if that is an indicator, people do know. I mean, it's not as if they don't know. But I do agree with you, Atul. It's a bit of a mystery how the U.S. consumer purchases a car. And when we had that discussion with Nick Collas, who is an automotive analyst and has been in that industry for, 30-something years, he explained that the U.S. car buyer actually makes up his mind in a window of 5 days. He realizes he needs a car, he's searching for a car on the internet, whatever, talks to neighbors, whatever, makes up his mind, buys his car, which is a very short window. So it's not studies over studies over studies. And if you don't catch him in that window, well, he's gone because he's found something else.
Thank you. It just seems and feels pretty strange for a big ticket item that people won't do the basic search. Of course, they have the trusted dealer network in US and everywhere for the ICE cars. They actually call their dealers who they had bought it from before. But still feels bizarre if 20-30%. And then you hear about the IRA credits coming in next year, 7,500 for a lot of people that will apply. Sounds very, very, very surprising that you don't have a shortage of Teslas already. And I'm not just saying Model 3, but even Model Y, there's a $7,500 tax credit. So, and you hear about it's the best-selling car. Maybe part of it is just this Tesla community, but isn't there any other information out there people looking for when they're buying? It's just, it puzzles me.
Well, just remember, loyalties are very strong. So if you think about somebody who's been driving a Mercedes or a BMW or a Porsche, they're going to stick with the brand unless, something comes along and says, hey, you should think about a different brand. And, Tesla really needs to spend time trying to communicate with the Porsche and the Mercedes and the BMW buyers and say, look, the reason you should consider, if you're considering an EV because you want to be climate friendly, the reason you should consider a Tesla are, A, B, and C. And I don't think Tesla does that. They're just hoping that people read about it on Twitter or they read about the internet. And that's just not the way people, operate. They want somebody to tell them, spoon feed it to them. Otherwise, they're going to go to the Porsche dealer or the Mercedes or the BMW dealer and say, hey, I want to buy an EV. Can you help me out? And so Tesla just has to work harder at communicating why a Tesla instead of these other cars. And to me, that's like a no-brainer. And, the fact that people don't know that a Model 3 costs $27,000 today is crazy. I mean, they should know that, but they don't.
Yeah, the experience I shared this weekend, with family from out of town. I mean, when I went, their reason for not even looking at Tesla was they just thought every Tesla was a $50,000 or $60,000 or plus item. And if you remember, with just S and X out there, there was basically, we're now in the 10 years of Tesla having $100,000 vehicles out there. So Tesla started with this reputation of, if you own a Tesla, it's an $100,000 vehicle. Then the 3 came out and the Y came out, and those were, still in the 50s and 60s for so many years. So you've got all these years of baggage of they're expensive cars. You drive a Tesla, you're probably doing well. And, to make that as abruptly as they made the turn on MSRP, the that turn in terms of sentiment of how much do these things really cost and what are people aware of, that takes a long time. I remember when they made those prices, it was January 12th of last year, and I think people were kind of waiting January 13th is there's just going to be this flood of orders coming in, and the answer is that the awareness just isn't that much. And again, we're kind of in this bubble here on Twitter. So I think one of the things this comes down to is so many years, a decade of Teslas being so expensive, and now you've had this abrupt move in pricing over this year. That awareness is going to take time unless there's something that inorganically happens to I think what Gary's asking for. And again, I'm not an ad exec. I don't know what the answer is in terms of what form, but somehow that awareness needs to be accelerated, because there's people in the situation I share, they didn't even we're not going to go look for it. Our price range is 30 to 40K. We're not going to go look.
I'd like to speak to that, but I was hoping that Xander would go next because he's had his hand up, and I'd like to go after Xander and then Natal, if that's fine with everyone.
Yeah, go ahead.
Thanks, Aaron. This talk of adoption, to back up a step, it seems like the marketing campaign is working from big oil or the incumbents who are trying to slow it down. So I remember Tony Seba's research. And can anyone speak to the numbers? Are we on track for the adoption curve, or are we just being impatient? Obviously, there's been a slowdown with the economy, but it seems to me from just feel that we are on pace for the adoption of the new technology.
Generally speaking, we're on track, but in a lot of ways, everything shifted approximately 12 months, at most 18. And that's part of what I wanted to mention. So prepare yourselves. 2024 and 2025 will be phenomenal years for Tesla specific adoption. And the reason why I'm saying Tesla specific is because the other companies, in the US at least, aren't going to be able to catch up financially and from a price competitive standpoint to Tesla, because we have that huge lead. There are massive amount of mid-car buyers, and what I mean by that is not Mercedes, not Audi, not Lexus, not premium brands. And the Mazda neighbors that I've had in the past, they're on their 5th or 6th Mazda. And when I talk to them about a Model Y, they were like, oh my goodness, no, and I don't think it would 4-wheel drive very well, having no idea that a BEV is going to be way better all-wheel drive than a non-EV. They just had no idea. And the reason why this phenomenon is going to happen is the interest rates are going to start coming down. There is a lot of Tesla buyers that are already intending to buy, and they're just waiting, where it's more cost effective. They're more comfortable with what their income is going to be over the period of the purchase, and they get way more bang for buck than they do right now with us being at peak interest rates. So as that starts to happen, the old phenomenon that we will forever be able to rely on is butts in seats. Nothing blows someone's mind more than getting in a car, getting in a Tesla, and driving it. Yesterday, I don't remember if I read it on X.com or if I watched it, but someone in our community was kind of in a polite argument with his friend about a hybrid being better than a Tesla. He said, okay, let's trade cars for a day. So he took the hybrid and his friend took his Model Y. The very next day, his friend went and bought a Model Y.
I think we just lost Sawyer, but I was going to ask the question. Do you guys think that the
One thing I
Cybertruck...
can say is that before what Jeff was saying about the Ford,
Sorry, Sat, were you going to talk or you can't hear me? So do you guys think that the Cybertruck is actually progressing faster than we're all thinking? Because, you know,
sorry, I didn't.
Yeah, go ahead, Omar. Why don't you answer that question? Because we are seeing. So I don't know. This is all anecdotal, but Sawyer was reporting that he had 250 people DM him about being offered, you know, the ability to configure their Cybertruck. He just posted a tweet just now with 8 Cybertrucks outside of the factory. What do you guys think?
Well, I didn't expect to be taking delivery in December 2023, honestly. I thought it would be a much slower start than that. But I think when you look at the factory, it really isn't that surprising. I mean, Gary, you saw it. They had to have, at least 100 Cybertrucks in and around the factory. They're not starting from nothing. They have a little bit of production volume going there, it looks like.
They have lots of volume. I mean, it's funny. The Chicago store had a Cybertruck in there, and the manager, who I know, said we're going to get a second one so we can give people rides. And then this weekend, they didn't get a second one. They actually took the first one and sent it out to Naperville because they had promised to send it to Naperville, and the store was empty. So I don't know how many Cybertrucks they actually have. I mean, from a numbers standpoint, yeah, there were a ton at the Austin factory, but it just feels like there should be more out at the stores just to get more, more awareness. I mean, when you put that Cybertruck in a store, it's like a magnet, and people just like literally line up around the block. At least this was true in Chicago because they see it from the outside and they go to say, "Wow, what the hell is that?" And then they buy a Model 3 or Model Y. So I don't know if they're getting enough out to the stores. And I don't know if people are getting them, if they ordered them.
Yeah, my guess is that it's supply constrained. Some supply is holding them back. When I was at the Bellevue store and the manager was saying that this is the busiest store of all the retail stores that they have out there, they had on the launch day, they had 20,000 people come visit. And we were asking him, Matthew and I were asking him, can we go and, test drive this Cybertruck? Can we look inside? He said, we're not allowed to do that yet because if somebody goes in there and breaks a part, we are not able to replace that part yet. And so maybe what's happening is there's all these trucks waiting in the factory, but they need a certain part before they can finalize the distribution of this.
Maybe. I think there's definitely a scarcity right now at Cybertruck. That's why they're able to charge people like Omar $20,000 more rather than wait like 3 months and get your Cybertruck. I just think there's a real scarcity right now. There's a huge demand. There's no question the demand is there, but I don't know how long it's going to take to fill in. If you ask me how many Cybertrucks can actually deliver in 2024, I think it's probably 100,000, but it could be 250,000 if they had the capacity to build these things.
I think what you just touched up on, Gary, makes a lot of sense, though, that they're getting these Cybertrucks out to customers, and the draw for people to go, where is that from? Who made that? Is going to bring people into the service centers of the stores and order a Tesla. That's a great point.
Can I just add one thing? Guys, I think what would be helpful kind of solve two problems. I think Gary, you're probably right. I think it's 100, 125,000. Could be more. The second half of the year goes better. But I do think, where does potential more volume or transition come from? A lot of first-time buyers could be Cybertruck reservation holders, and they might be 4 years, 2 years, 3 years waiting for it. I think if they did a direct email campaign and said, hey, you're this number on the list, we expect your car to be ready a year or 2 years from now, whatever. Here's X, a year of free supercharging, buy a Model Y. They might get people to lease or buy a 3Y, SX or whatever, in the interim until they get their truck. And I think that would be a way to get some new buyers into the brand that have been waiting. And, for the Cybertruck, and maybe it's like a first impression or a first product, and then maybe they wind up buying two, or, and they have two when the Cybertruck comes ready and they don't trade it in. but it just feels like a missed opportunity that they're kind of just banking on 2 million people waiting around for 2 to 4 years to get their truck.
I think that would be smart. And then look, they're trying to give $1,000 coupons out to people that want a Cybertruck. So if you buy a Model 3 or Model Y by the end of the year, they'll give you $1,000 off. That's smart. But I agree with you. I think rather than make people wait 2 years and then lose interest, I'd rather get them into a Model Y or a Model 3 today, really understand what's great about a Tesla, tell their friends what's great about a Tesla, and then when their Cybertruck is ready, they can trade it in. That to me would be a much smarter strategy, I think.
Yeah, I mean, to be honest with you, when you think about, I think Tesla does everything based on cost, analysis, and if you did a widespread ad campaign for conversion, what that costs versus what the modular price, variance of video. I'm not a huge component of like the price cutting for drawing demand in or whatnot, but I think you have 2 million people's email address, you have their credit card information, you know where they live. Like, that's a very cost-effective way to drive conversion. And I've been waiting literally now over 4 years for 2 Cybertruck locations. If they told me, even though my first one's very early, but I'm in New York and that state might be a 2025 or 2026, if they told me that, I'd buy a Model Y Performance or an X like today and just or lease it, right, for 2 years and then get the Cybertruck when it's ready. And I just don't understand. I think, yeah, it's cool, $1,000 off, but I'm like, I don't want to take a new truck in or a new car and then get an email in 3 months or 6 months that my Cybertruck's ready. I'm like, I don't need to have both of them. I need to have one of them. So, I hope that's my biggest issue with actually the whole Cybertruck in general. The pricing strategy, clearly there's demand. I think they spent 4 years on all this engineering greatness, but like the rollout strategy with the pricing and the communication for people who've been very loyal or patient, to get the price being significantly higher and then not even communicate timelines and transparency, I think there's a bit of a risk, especially if Rivian is able to, to make their cars a little bit cheaper, and the RS1, the SUV version, gets more popular. Like, people really like that car. It looks good, and I know people have been waiting very long time for that one as well. And if that gets any cheaper, the value proposition versus Cybertruck gets better. I'm not saying one's better than the other, but like most people just want an electric, cool SUV with cool brand cachet, and they both have great street presence. And I think Tesla could do a little bit more to manage the customer experience.
Thanks, JP. I wanted to ask the question to the group here. Do you guys think that Elon, at what time could he actually pivot and start saying, yeah, we're going to invest in Giga Mexico? Is it still too early? But when he made that announcement in Q3, the 10-year was still off the charts. Things have fallen. Do you think that he'll wait it out some more before he does this, or do you think that he might actually do it sooner than we think?
I spoke to this a little earlier. I don't think Elon is holding back at all in terms of Giga Mexico for non-practical reasons. There's something that's been shared a few times. I think it was Jeff. It was someone else, forgive me. But the worst thing you can do from a manufacturing standpoint is open up a brand new factory and a brand new product at the exact same time. It's like shooting yourself in both feet with 2 different shotguns. You shouldn't do it unless you love pain. And Elon doesn't love pain. He only loves it. So that said, what I think is actually going to happen is they're going to kick butt and planning and engineering and dialing in the unbox method in Austin. And as that starts to get close, especially when the interest rates come down, they might start pushing faster. But I think the moment the interest rates come down, they're going to go full bore ahead in Mexico in terms of the manufacturing. And then by the time they have it dialed in Austin and they're starting to sell product, then they'll start ramping up Mexico like crazy. And they'll be in a race with each other the same way that Austin and Shanghai were in a race. I think Austin and Mexico will eventually be in races with one another, especially since Mexico will be able to be completely focused on the next gen vehicle. So like all the lines in Mexico can just be producing that one car, where I wouldn't be surprised in Austin if it's only one line initially.
So Nuevo Leon is really an amazing location. It's really booming right now with industrial output. I think Tesla still has a ton of headroom in Berlin and Austin. I don't think they're anywhere close to what their capacity is. I think we could see volume grow at least 2 to 3 times from those facilities in the near term. And I mean, they just have so much room in Texas. It's just kind of mind boggling driving by it on the freeway. It's like, wow, this is an enormous amount of space in this building. And they even have more land than that. They're doing the cathode and everything. The Nuevo Leon location is just a few hours away from Giga Texas, I believe maybe 6 hours. And it's even closer to Starbase. So it's right kind of in this Texas triangle, but with access to much lower cost labor and a much lower cost supply chain in Mexico, and with the advantage that you're still within the North American umbrella. You have auto free trade zones that apply, and you can sort of move supply back and forth. They even have that special Tesla port at the border to help get parts through in a timely manner so Mexican suppliers can supply Texas and California. So, I think Mexico is going to be great. I'm not sure when exactly they'll start construction, but I'm imagining it'll be sometime in 2024. And if they start construction in 2024, it'll be, at least 2025, 2026 before it's really ready to start producing in serious quantities. And at that point, the next gen platform will have already gone up in Texas, and it'll be the appropriate time to start branching out. It might even be appropriate to use battery cells made in Texas, which would qualify for the $45 a kilowatt hour battery production credit in the IRA, and to ship those out to Mexico, where you could then take advantage of the lower cost of labor and then, have a really the lowest price point for the next gen vehicle coming out of that facility.
Omar, I'll do you one better. And CATL's building, they're going to be building the factory in Mexico. So I think that the Mexico factory is going to be in line with what we see from CATL. So that way, I don't think the batteries, they might be going back and forth, but I think if CATL is building them in Mexico, that qualifies under NAFTA, that it would be North American made and not Chinese made. And that would be massive benefit for those vehicles. But I'm also with you. I don't know. I think the investment in the building, I think we get the structure maybe in late 24, but I actually see 24 and 25 as much more of an execution and filling out the existing footprint more, because I think I'm somewhere between 4.5 and 5 million with the existing factories at capacity. And I think that's not too crazy. I think it's relatively conservative based on the permits and the floor plans that have been filed. So it's not really necessary for Giga Mexico to be up and running within 24 months. For the volumes to kind of 2 to 3x from where we are now.
Is it okay to ask a question about margin?
Oh, please. Yes, please, Atul.
So, given that all these other ICE companies have scaled back and even the so-called startups are struggling, and obviously media has painted a narrative of EV not growing at all when it's actually growing. But a lot of material is easily available. Lithium ion itself, which touched about 650,000 price point, is now below 100. It's down 85% from the high, 85%. In Link, it's somewhat similar to that. is likely that some of the other materials, some of the other suppliers, which were sold out when they were planning for, let's say, 2 times increase in the production volume for F-150 Lightning, et cetera, is going to be easily available. But has somebody kept track on what the time lag is between the last time when the prices started to rise for these things and started to show up in the cost side of Tesla's P&L? So what kind of, obviously these are spot prices, and obviously Tesla buys majority of it is on contract, but still there was an impact. These guys mentioned it on the call. So any idea about time lag?
Can you be
Several
more specific?
quarters.
Yeah, just okay. I mean, just I missed part of the question.
I think
Maybe
he
I
was
missed
talking about the lag in commodity prices being passed through.
Yeah, commodity prices plus, let's say, there are other materials, right? So it's not just the lithium ion, refined lithium ion, but also other supplies for, let's say, wiring, etc., or semis. The prices of a lot of those things have fallen a lot. How long does it take in terms of showing up in margins? 1 quarter, 2 quarter, 4 quarters? Is there some
6 to 12 months.
It depends on the supplier, really, and the part. Some things they do in-house, some things they outsource. So there's no real definitive answer, several quarters. But generally, if commodity and input prices are going down, that's only going to help. Even if you have a longer term contract and it might be a few quarters before you're able to actually get that lower price.
Yeah, the other thing is the span of their distribution network and their supply network. So right now, legacy EV is, they have whatever 200 days of inventory. So it's going to take them probably double or triple the time it would take Tesla to realize those margin improvements. The other thing that legacy is doing right now is when they cut capacity like that abruptly, is what you've seen Ford and GM do. They're basically screwing their suppliers. They're pushing all that back to them. They're not going to. Some of it they'll pay for, most of it they won't, and they're basically I don't want to use these terms, but it's basically like shove it up your ass. And what happens is those suppliers then build in that cost structure of doing business with a partner like that, and it's going to take them longer to come down the cost curve. By the way, and if they're using any of their legacy suppliers, they're already 30-40% over capacity. So there's different answers for different OEMs. Tesla supply chain moves very, very quickly. They're pulling material in, they're pushing product out. They have 16 days of inventory, but about half of that is actually moving product from the factory to a point of sale. So they actually have, I think, in some cases, insufficient inventory. It differs by different region. Tesla will move that through pretty quickly. A lot of silicon lead times are in the 20 to 30 week range for silicon. And then the commodities that are staged and built up over many phases, like the ones that go into batteries, for example, those would take north of 20 weeks to get all the way through into a battery module and out. So yeah, a couple of quarters, basically everything's flushed through, but the stuff that, is vertically integrated, that stuff's flushing through in weeks.
That's very useful.
Can I add
Yes,
one thing for you? Just, I'm not as smart as Jeff on this stuff, but one thing I've been tracking pretty aggressively, and I think this is something that, for everyone, and please fact check it, look it up, help me correct it if I'm off base. But this year, in 2024, for their full production cycle, whether that's for auto or energy, Tesla might average below $100 in cost per kilowatt hour for their battery cells. So this will be the first time that anyone is in below 3 digits for a full year. And this is somewhat dependent on the transition to the LFP packs in China and the M3P packs that are going to be replacing most of the long range and performance variants in the 3 and the Y. But getting the battery pack is the single largest cost part on the vehicle, and obviously it's the majority of the cost of the mega pack. But to be sub $100 relative to their competitors is a massive gain, and they have so much to kind of everything Jeff articulated about their ability to kind of move through inventory and their supply chain. Like this, they have so much pricing power because they have so much partnership built in with their suppliers that they're able to absorb, even more than their suppliers can produce, and the cost base is now going down for them. So between 4680, the LFP and the M3P batteries being the majority of units sold, and reducing your nickel, the NCM batteries, like this is meaningful for the margin and the cost of the company as a whole. If it doesn't happen in 24, I feel fairly confident it's definitely going to be sub $100 per kilowatt hour in 25.
Thank you. Just to add to that, I myself cover Panasonic on the equity side, and they are outrightly sharing half of their IRA proceeds with Tesla. So pricing aside, whatever they get from IRA, they're already not just setting aside, they're actually paying almost $1 billion to Tesla on an annual basis right now.
Yeah, to be clear, that was X credit was those numbers I'm giving. The IRA
yes,
would be additional. So that's even more icing on the cake.
Question. Sorry.
Oh, go ahead.
No, please.
Okay, yeah, no, I was just going to tell people about you. So you're the managing director of research of Jefferies in Singapore and Asia. Thank you for joining us. I mean, guys, we have the great panel here. Follow the folks here: Whole Mars Catalog, Gary Black, Kristen, Xander, Alexander, Jeff, Sat, Emmett, JP. Oh my God, there's just so many, and of course others. Change the subject here. I want to ask the group here what you guys thought of the executives, the movement of Tesla executives out of Dojo, and then Ganesh was left, or he was possibly fired. Peter Bannon was raised, and then another Tim Zaman left as well. And then, we're waiting for FSD version 12. Is there any concern here that might be delayed? Let's start with you, Omar. I mean, I thought by now you'd be testing FSD version 12.
Yeah, I think the goal was to have it out by the end of the year. It's not the end of the year yet. The Tesla holiday update is supposed to be rolling out this week. But I never really thought it was that likely that they were going to make it. I always thought it would slip into Q1 or Q2, as these things often do. So this will be a big moment for them. They've been working on this since December 2022. It's going to be really exciting to see what they've been up to. In terms of Ganesh and Tim, it's probably not a good sign for Dojo. I had heard that Ganesh was possibly fired due to them not sort of meeting some expectations. Tim Zaman got a job at DeepMind Google, which is, an incredible company, obviously, as well. So, I mean, people tend to move around a lot in Silicon Valley, so it's kind of to be expected to some extent. But the real sort of test for me is just going to be seeing V12. Is it any good or not? Are they able to get it to work? Is it better than V11? Does it show promise to improve rapidly? This is a major crunch time for the team. They're all being pushed very hard to get this groundbreaking new version of FSD out. And so maybe it's not surprising that you're seeing some people leave or some reshuffling of the executives. Pete Bannon, he'd been doing a lot of the 48-volt architecture for the Cybertruck. Refocusing him on Dojo, I think, is going to be really important. I mean, Pete Bannon's a legend. He is probably one of the best people out there to chip architects to lead the design of a next generation training computer. And frankly, it's going to be really critical. With the new end to end approach, compute matters more than ever. So if they're paying 70% margins to NVIDIA, they're going to be able to get less compute per dollar. If they're able to build their own supercomputer and have a much more energy efficient system that's lower cost and still gives them the capabilities they need, then they're going to be at a significant advantage. But based on what we're seeing, it doesn't seem like they're doing that well on their goal of getting Dojo to outperform the NVIDIA cluster. Elon always said the real test is if the engineers want to use it. We heard about them putting Dojo into production and starting to use it for auto labeling, but we haven't heard anything about Dojo actually being used to train the models that go into the car. As far as I'm aware, it's still the NVIDIA cluster that's training those production models that drive our car. And NVIDIA is very proud of this. They actually use it in their marketing materials. Hey, Tesla Autopilot trained on NVIDIA. So, and you look at XAI, they're training their LLM on NVIDIA, not on Dojo, right? So if Dojo is to really live up to the hype, what it could potentially be, you would want to see them really make it a cloud service that's lower cost that other companies, like at least XAI, right? At least Elon's other companies, Twitter, other companies would actually want to sign on to use. As it stands, even Tesla isn't using it for their own use case, and it was designed just for them. And maybe they are using it more than I know. Maybe I'm not giving him too much credit, but I'll be interested to see what they have to see at AI Day. This is a really important one to get right. So hopefully Pete Bannon and the new leadership can really knock it out of the park for the D2 chip they're designing.
Anyone else?
Well, one thing I can say that historically, there's always been executives that leave Tesla. Either they're retiring or they find a better position or better pay, or they're looking for something different in their career, and or things didn't go out or didn't meet the performances. So I think it's a normal part of operations. Like Doge's been around for a few years, and it needs to expand. So team will naturally change. It won't be the same forever. I think the reason why you don't hear this as often from other OEMs is because they're not doing anything that's cutting edge, and they're doing the same thing that they've been doing the last 100 years, more or less. So you don't see this exodus also in some aspects, but then you don't have this microscope on like the exiting of executives like Tesla does. There's other companies and tech companies, even in Silicon Valley, where executives leave on a routine basis every year or whatever, but they never ever get news on it. So I think it's just a little bit of unfairness in terms of how it's reported. I also feel like it's always somewhat portrayed a little negatively. I don't necessarily think that's the case because Tesla's kind of like 5 startups in the way I see it. So when you're growing, you're gonna need different people on different teams, and the nature of the project changes.
Just to highlight, Omar makes a great point about the NVIDIA compute now, but just like the FSD chip, like Tesla was using the NVIDIA chip, and then it hit its capacity, and then they designed their own chip. So I think, it's not uncommon for them to use a leading, at the time, technology for and then develop around and / past it. Even if you go back to Autopilot 1 with Mobileye. So I think, as Omar puts it, like this is a very, very crucial component that it needs to get right. And I think it's very complex, and I think it's very clear that Tesla's trying to solve for, level 5 as it's written now, and they're not looking to kind of wade into
JP,
level 3.
JP, do you have an iPhone? Can you swipe from the top right corner and put on voice isolation mode for us, please?
Yeah, I think the Dojo system is an incredible system in many ways. It has some great innovations, like the multi-chip module and stuff like that. I think they're doing some really interesting stuff. Like, I'm very excited about the prospect of Tesla custom designing these chips. But the problem is NVIDIA isn't staying still either. So you not only have to pass NVIDIA, you have to pass what NVIDIA is doing next. And that's really what I want to see. I want to see this actually become a cloud business in its own right, the same way Amazon sort of had AWS grow out of its sort of server business for its website. I'd love to see this actually become a very positively cash flow generating business for Tesla that essentially subsidizes their training runs for Autopilot and Optimus. And I think they can do that. Like, they've got some really smart guys on the chip design team, but it doesn't seem like they've done that yet based on what we're seeing.
And from what
Yeah.
I've seen, kind of studying Pete Bannon, is he's very, he moves quickly. He's schedule focused. You know, he kind of told the whole story of coming in that first autonomy day of like, you know, his whole hiring and like, and the investment that Tesla did in silicon design, and basically like, hey, we started here, we had running silicon within X number of months, we were in production a few months later, and that inference computer's highly competitive. They've got the next version out now, and they're working on hardware 5. And they basically, you know, and JP said earlier, they swapped out, you know, NVIDIA at that point. Instead of paying NVIDIA 70% gross margins, you know, they can get another, you know, I guess 2 computers for free now, and not charge themselves that margin. So now they're trying to do that on the network side, and I'm confident. Something must have happened with the second iteration of Dojo, because they're obviously they're in production on the first one, and that's probably what, you know, they were working on at the time. And there's either a schedule issue, a performance issue, a cost issue, or a combination thereof, and maybe they had to make a change. I think we're all speculating, but you know, if you've worked in Silicon Valley, you see personnel changes every couple of years. It happens. I think you see a rash, you know, more of them. I think, well, then, you know, maybe there's something to double click into. But the fact that I feel better that, you know, nothing against the prior gentleman, Ganesh, just the fact that you put Pete Bannon in that position, I feel better about that. As long as they're continuing to build and fill out the team below them, I think that's what really matters. His leadership is proven. He's delivered. And he just shipped the 48 volt architecture as well. So he's got a number of huge hardware and silicon accomplishments at Tesla already. And he comparable in the industry too. Like he's top. Like this isn't like Tesla smelling their own their own fumes. Like he is top notch in the industry, and everyone knows that. To you, Herbert.
Yeah, welcome, Jonah. How are you doing? We haven't spoken to you forever. We used to be on these spaces regularly, every other day together. How are you doing?
Hi, I'm doing great. I think I had like bronchitis and COVID and pneumonia for like 2 months. Like the COVID was at the very end of all of that. But yeah, I'm doing great.
And then you moved. So you know, you interviewed Elon probably a year now, maybe a little bit longer. Any thoughts on what's happened to him? I mean, we all know that his behavior has always been. We read the book. We know he's unpredictable. Any thoughts on Elon and his mental situation and how he's thinking about things?
Yeah, well, he's a human being, and you know, we're all going to have our reactions to things. But really, I'm kind of like, you know, not really plugged into the news these days. So I just kind of tuned in just to see what's going on with the news and with the Tesla mainly, just to see how everybody else is doing.
Aren't you still at Tesla, right? Or what happened? Or
No,
not Tesla?
I have another job now.
Okay, gotcha.
Yeah, so I left them in almost a year. So yeah.
No, right. No, I know that part, but okay.
Yeah. Yeah, I've been focusing on learning to play the saxophone actually. So.
Oh, that's fantastic. Okay, no, this is good. So yeah, this is you know, we talked about Model 3 compact. We talked about Cybertruck. Who here thinks that the Model 2, the Model 3, keep getting it mixed up, right? The Model 3, sorry, Gen 3 Model 2 car is built on the same platform as the Cybertruck. Initially, everybody said that's crazy, that's not possible. But now, more and more people are believing this is true. They might not use stainless steel. They might use, half the gauge, but they might use a different material. But everything else is built on Cybertruck, right? That is going to be the future. 48-volt structural batteries, 4860s, all those things. Who wants to jump in there first?
I'm happy to. Short answer, no. Elon confirmed it. I'd suspected this for a while and a couple other people, but with the Sandy Monroe interview, I don't think he used the word unboxing, but basically he said they used as much of what they'd learned in manifesting and developing the unboxing method as they could on the Cybertruck. But what the Cybertruck is, and the phenomenal, never before seen, he kind of implied that, Sandy, you think you know manufacturing, but when you see what we've done, your mind will be blown. I'm totally re-paraphrasing it, but that was the kind of emotion he sent out, and what Sandy received by the audible noise that he made. So there's a correlation, but no way is it built on top of the unbox method.
The manufacturing aspects of making the car more efficient, the design of the 48 volt, I think will be used, but I don't think it'll be the same platform. I think it's too big. It has to be a smaller platform for the compact car.
I actually think it's going to be I think it's going to happen in China on the 3 or the Y first, and then it'll be adapted to the Gen 3 platform, because I think this came from Tom and his team, and I think it was part of the retooling that we saw last year, and also his global tour and bringing the Chinese team with him to the other factories. That I think to kind of going back to what Omar alluded to, and if you look at the Q3 report on production capacity, there's a greater than sign on Shanghai, Austin, and I believe Berlin. We know that the permits and the environmental permits have been filed for a while for Berlin and Austin, and they have been approved. So I expect Berlin to get the 1 million, the additional 500 approval sometime in 24. And Shanghai has much more approval capacity based on the test runs and the environmental analysis they did at the end of last year. So I think we can see a bit of an uptick in the production. And if the interest rates come down, I think we won't have to worry as much about supply relative to the demand.
I think that I think and Herbert, I don't know where else you're taking this. I think the guide for Tesla in the third week of January I think that's gonna be hotly anticipated, because their guide is really gonna define, is the EV adoption curve intact and still moving, up and to the right. I believe that's the case. Again, I believe you have people looking at high frequency data, quarter on quarter, and we've seen quarter on quarter slippage before 2 or 3 years ago, but then all of a sudden it just gets made up and continues shooting up and to the right, and that's when EVs were a lot more expensive than they are today. So it's going to be interesting. I think that guide in the third week of January it's going to be basically 5 or 6 weeks from now. I think that's going to be one of the more critical things. I think people are going to look past. I know there's the 1.8 target, for 2023, and that will be, P&Ds are always kind of hotly anticipated, a day or two after New Year's. But I think it's really going to be the sentiment from Elon and the guide going forward, and that may set kind of the whole pace for the year upcoming. And the other good thing about doing that in the third week of January is they're going to have 3 weeks of January data, 3 weeks of the $7,500 IRA credit being off invoice. And I mean, that could be some meaningful data. And maybe we'll also see how Tesla actually plans to reveal that to more potential consumers if they step that up as well in the new year. So the other thing to look out for is I wouldn't be surprised if you see them having to do a pretty big inventory buildup leading up into that, at least in North America. Because as Alexander said, I think, when people are going to look for a vehicle, they put themselves on a little bit of a mental timer. They don't want to, be, looking and waiting for a vehicle. They want to go, they want to buy one, they want to drive off one with one preferably. And Tesla really does not have a tremendous amount of vehicle inventory. As we've looked at it, when you look at it in days and you look at the number of nodes that are out there where you can actually go buy a Tesla. So don't be surprised if you see a maybe even a pretty big production number and them actually starting to build up some inventory to get North America more properly seated. And then you've got the Model 3 Highland in China and Europe and to see that getting traction as well. That's going to be very interesting to watch. And then just the minor changes they've done to the Model Y. So I think this last couple of weeks here, and then definitely the first couple of weeks in January are going to be super exciting, just to see like how 2024 sets up.
Hey Gary, how will the street react if Tesla hits 1.8, or if they hit just a little bit below 1.8, or if they hit just a little bit above 1.8?
I don't think the street cares. I think they're looking more, what's the guidance for next year? If they come in at 178, as long as it's not like a huge miss. I mean, so 178 would mean they're at 456 instead of 476. That might freak some people out. But, it's like Tesla's the type of stock, as you guys know, where it'll go down for a day and then, people who want to buy it will buy it up. So it might be a knee-jerk reaction, if at all. I think the bigger issue is, how big is the $7,500 off invoice going to add to, how much is it going to add to 2024 volumes? How much is the Cybertruck halo effect, which we know exists, but you see it? And, Model 3 refresh, once it gets to the States, is going to be, probably another big thing. So I don't think if they miss by that much, like, under 20,000, I don't think that's, more than a day, you might see a knee-jerk reaction by the traders, but people will buy it up. And then I think it'll be fine. I think the bigger issue is going to be what they guide for 2024. The streets right now at 2.2. 2.2 is only what? That's only 20% volume growth. And, I think Elon still secretly believes they can grow at 50%, even though, if it's 2.4, that's 33% growth, versus the 1.8. And so my number is 2.4 for next year. And again, they won't guide until earnings, which will be the 24th of January. They don't guide during the production and distribution numbers. They never do. So, we're going to have to wait until mid-January to find out what they're actually thinking for 2024.
Hey Gary, can I ask you a question on that train of thought there? So I think it's everything you said 100% in line. I think we're going to get around 1.8, and I've been looking at I've seen like 2.15 to 2.25 is sort of like where people are. Obviously, average is 2.2. I'm at 2.4 as like a base case for me, but I can see Elon guiding like a little bit safer, where at like 2.3 or 2.5, and then potentially outperforming as the year goes on and readjusting. How do you think a more like muted, 2.3, 2.35 guidance would actually play? I don't actually care short term. I think it's what you said is spot on. There'll be like sort of a knee jerk, but like, what do you think from an analysis sentiment? Do you think people are looking at Elon maybe with more conservative and mature eyes, and he might be sandbagging, or do you think that it'll just kind of fan the flames of like a demand narrative?
Well, look, if they come at 2.3 as a guide, stock's going up because the street's at 2.2. I'm just thinking 2.4 to me sounds more about right, given everything that's going on for next year with the halo effect from Cybertruck, the Model 3, the $7,500 invoice. You could throw FSD in as a bonus if they get to level 4. But if they come in at 2.3 as a guide, stock's going up. So, if he wants to guide at 2.3 just to surprise, where the street is, I mean, that's kind of an art that a lot of CEOs are good at. I don't think Elon's particularly good at that. Not that he even tries to play that game, but a lot of times people try to come in right above where the street is, and then to your point, over the course of the year, they can raise their guidance as the year progresses. Now, it's interesting for this year. If you look back at what they showed in the third quarter deck of last year in terms of installed capacity, that little chart they show in like page 5 or so of the slide deck, it was 1.9 million, and then they guided to 1.8 million. So if you want to think about, this year they show installed capacity of 235, even though, China's way ahead of what they showed there. I think they showed there China at 950. China's coming in at like 1.1 if you just annualize the latest month. So they could do a 2.3 type number, and the street will be happy with that. So if I were them, I would probably go in a little bit more conservative. But I personally think the number is going to wind up being at like 2.4 for next year, just because of everything we've talked about.
Can I ask you one more question on this sort of similar train of thought here, as far as what this means to like the earnings potential? Because like the way I think about it is, I think the numbers were pretty much in sync, and I think honestly the big thing that was illuminating for the Cybertruck day was, or the delivery day was, and what we learned subsequent was like how much time and money, in R&D and process, investment went into that. Obviously, we know what goes in and what they're doing in generally about cost, but like, I think you've said this before, and I think I'm similar in that this kind of feels like when the Model Y came out, and then all of a sudden the production went off. Like the last 2 or 3 years, we've seen Tesla spend a ton of money all over the world. Austin, Berlin, and even Shanghai. But Berlin and Austin have been running below their cost basis. So this year doesn't feel like a huge amount of expenditures and much more focused on execution. Do you see, like, how do you see earnings and free cash flow? Like, I think we'll see some of the costs come down, as we alluded to earlier, but like, do you think that we'll see maybe potentially better earnings and free cash flow as less sort of like CapEx and R&D kind of have been spent this, from previous years?
I don't know. I mean, a lot of it comes down to pricing. If Elon decides he wants to cut price again, to really boost the volumes, then you're going to have a repeat of what you had this year. So this year, as you know, earnings started the year about earnings are down 45% for 2023 estimates, and are down, 45%, 45% for 23, 43% for 24. So the street is winding up at 310 for this year. I think it's 390 for next year. I'm higher than that because my volumes are higher than the street. But if you look at what you're talking about, which is pricing relative to cost, if you look at average ASP, it's down about 17% this year over year. If you look at, third quarter versus third quarter a year ago, where cost of goods is only down 8%. So you would think that at some point, the cost of goods reductions that, we've actually seen will start flowing through the P&L. But Tesla has priced in front of that. They've basically taken the prices down quicker than their cost of goods has actually come down. And at some point, that does catch up. And I'm hopeful that, Elon's learned a lot this year about pricing that, I know people disagree with me on this, but the demand elasticity is nowhere near what he thought it was, because you really haven't seen much of a change in the volumes. And so hopefully he's a little bit more disciplined about pricing next year. And if, is going to, you're going to have the declines flow through the P&L, and hopefully the prices will stay kind of right where they are. And if there is an excess of production over orders in any given quarter, you can do inventory discounts rather than cut price, which, price declines for an analyst are terrible because you got to flow them through in perpetuity. But an inventory discount, you just build them into your model for the current quarter, because they can go away as soon as, as we know from China, the Model Ys are now gone. So I would hope that for next year you get the cost declines that we've expected this year, but we never really saw. and that the pricing stays stable. It doesn't have to go up, but we want it to just not, go down again like it did this year, 2023. I don't know if that answers your question. But.
Yeah, no, I appreciate that. Yeah, I'd like to see, I think that this is going to be, it's a bit of a prove it year. Obviously the macro isn't 100% better, but maybe the sentiment changes. But I just think that I think we underappreciated, even because the margins were so good when the prices were higher, but I think we underappreciated how much burn Austin and Berlin were on the whole company. And there's a chance this year, for a bit of an upside surprise, in my opinion, if both, like the fastest, if Austin gets to over 5,000 units a day, that's sort of where the break even is on the cost basis. Like we might see things improve much quicker at the midway point, through the midway point of this year than most people are pricing it.
Yeah, the one thing about margins, people got to keep in mind that, and I think Alexandra pointed out before, Tesla margins now, auto gross margins are 16 in the third quarter. Let's suppose they're 16 in the fourth quarter. The industry is actually above that. So, BYD, if you look at where they were 22% in the third quarter. 20% is the estimate for fourth quarter. You look at GM's about 17, Ford's about 14. But, like Mercedes, those with the premium brands like Mercedes is 21, BMW is 20, and you got Porsche at 28, Ferrari's up at 52. So, Tesla's come down from high 20s to 16. They have very pedestrian margins now. And I would hope that, and Elon has said this on the call as well, we could take margins down to zero and make it up on services and FSD. I mean, if he did that, the street would hate it because he's never been able to do that. FSD's got a take rate of around, 10 or 12% while it'll rise as it gets better. To think you can make it up the way, like Apple, he's compared Tesla to Apple, where you could actually sell a lot more services. I don't buy it. I don't think anybody on the street would buy it. I think if they continue to take margins down and try to make it up on FSD, the street would kick out.
Gary, I have to correct you, right? I mean, the margins you're quoting are mainly ICE margins. The only one I can accept is BYD, which has the higher margins for two reasons. First of all, more than half are still hybrids, and these are mainly local Chinese margins for them. So they have not yet the additional cost of transportation and the international markets, which is going to cost them a lot of money. All the others.
I'm just talking about gross margins.
Yeah, but I mean, they obviously they only produce in China, so I don't see them. I mean, I see them as, and I said that earlier, I see them as the big competitor, and do actually think they will perform even only on the EV side. But at the moment, it is still a mixed margin, and all the other margins are ICE margins.
That's true, but again, my point is that margins are already in the middle of the pack. They're not at the high end anymore, and I think
not middle of the pack if you compare just to EVs. Then we're still skyrocketing compared to everything else. I mean, Ford
nobody else makes money. Nobody else makes
exactly,
money.
Exactly. That's why we're skyrocketing.
Well, and again, Tesla is competing against all automobiles, not just EVs, as we always talk about. And to compare them to Rivian or Lucid or Polestar, none of those guys are making money, nor will they make money. So I'm just saying, if they want to be compared to other auto companies, they are middle of the pack now. And if you want to compare them to the high end folks, Mercedes, BMW, Porsche, Ferrari, yeah, on ICE, but that's where their scale is. They don't have EVs yet, so you can't really compare it to EV margins because they have no scale, unlike Tesla.
You don't think Rivian is going to make money? Because, I mean, you have them in your fund, right?
They'll make money, but they don't make money today. They'll make money in 2026. Okay. But no, they're not there yet. They're only making 54,000 cars a year. They're not going to make money yet. When they get to 100, they can make money.
I have a question here. Alexandra, help me out.
Go ahead.
It's on the back of this whole margin thing. If you were running a business, the question is to all of you. If you're running the business and you don't have to, I mean, you have an option to actually meet this quarter's consensus estimates or analyst estimates and run the business that way. Or in the year 2023, when you know you're increasing volumes and everybody else is struggling. And in the year before, you've seen everybody else come up trying to do, and when they do EV, they squeeze the supply chain a bit. But in 2023, you come in and you see you have an opportunity because the demand would be lower. You go aggressive on pricing. And that settles the debate, or that puts so-called competitors in their place for the next 2, 3, 4, 5 years. Which of those two things will you actually do? Try to meet the consensus estimates for the 1, 2, 3 quarters, or you actually go for the kill?
I don't care about consensus estimates, and I think people overestimate how Wall Street's preoccupied with it. But we do look at value creation. And, as I always say, cutting price is easy. It's like Elon always says, prototypes are easy. Well, anybody can cut price. That doesn't show any creativity whatsoever to cut price. You can cut prices all day you want, and you're going to gain volume. But is that a sustainable business strategy to keep cutting price to gain market share? And most people who look at industries, lots of industries, would say it's not. Your creativity, the way Apple did, to say to people, hey, look, we're going to charge you $1,000 for a phone, and we're going to tell you why it's worth it, and we're going to show you all the great things you can do. Tesla's got the best product on the market. And if you just say, well, we're just going to cut price to gain more market share, I think most people on Wall Street would say that's kind of a dumb strategy. You get some volume out of it, but as you see with this year, you started the year with a 1.8 million estimate. You're winding up with a 1.8 million estimate, despite cutting price all year. So I would argue you didn't get much for it. Now people will disagree with me all the time, as they do, and say, well, if they hadn't cut price, the volume would have been 1.6 or 1.7. I'm not sure about that. If you'd taken that money or some of that money and either bought down loan payments, which a lot of people do that, so you buy down the loan from, say, 8% to 3%, or you use some of that money to educate people why they should buy a Tesla, or why they should buy an EV versus an ICE car. So I'm not a fan of cutting price further from here, but I don't really want to look backward because it is what it is. I'm just saying going forward, I don't think there's much room for cutting price more, because I think margins are already pretty low at 16%.
Gary, given that, this person has created multiple businesses, several of them 100 billions, and one of them nearly $1 trillion. Are we just, your point about marketing or information aside, that's a very logical point. But saying that he doesn't understand pricing or when to go with pricing, or he doesn't understand strategic moves, or implying that he doesn't at all understand pricing for a guy who actually on the PayPal side, and then in Tesla priced Model S, had a clear plan of what to do with the cost and pricing 15 years back, 20 years back. To say that he doesn't understand because the last 3-4 quarters they lowered the prices, knowing the data they have, are we just completely discrediting him and his abilities to see?
You're being ridiculous. I'm not saying he doesn't understand pricing. I'm just saying I wouldn't do that. But that doesn't mean he doesn't understand it. He built this business from scratch. And I hate it when people put words in saying that I'm disagreeing with Elon and Elon doesn't understand it. Sure, he understands it, but that doesn't mean that he's correct. And I would just say that rather than cut price, which again, anybody can cut price, why not try some sort of communication? So I'm just suggesting it. I'm not saying he doesn't get his own business. Of course he does. He understands better than me and probably better than anybody on this call. But don't say we're denigrating Elon because we disagree with him. In the institutional world, people disagree about investments all the time. You're asking me an investment question. Do I think that they should have cut price on Model Y? I don't personally. I would have tried advertising. That doesn't mean that I'm denigrating the man. He's built a wonderful business, and I just hate when people stray from here's an investment question, let's debate it, to you have no respect for the guy, because that's bullshit. I respect him tremendously.
It's not no respect. It's about giving space to possibility. The reason why he might have done it is possibly this, but in your view, the opinion is that he should use that same amount of money to educate, and if not advertise, educate. Just put up posters. Yeah,
He could have done
I
both.
get that,
He didn't have to cut price as much as he did. He could have spent more money
slack.
educating people.
Maybe he was thinking something else strategic. I mean, cut him some
Well,
slack.
yes,
You
there is
can
something
disagree.
different. There's something completely different. From day one, the Model 3 was dubbed a $35,000 car. That's what he set out to do at the height of the pandemic when the cars were $65,000. He said he's going to lower the cost of the cogs and then bring the price down. He did exactly what he said. So, and I completely disagree. Nobody could just cut prices. If that was true, all the OEMs would be doing that, especially their EV programs. And none of them can make a profit even at current prices. They actually have to raise the prices, which means that nobody would be able to buy at the price range they have to raise it. So I don't think anybody could just cut prices and still have a 16% margin. In fact, Toyota has, 7-8% on some of the sedans. That's like miracle. So I don't think it's that easy in terms of cutting prices and still having 16%.
I'm just saying it doesn't contain any creativity to cut price. You can just cut price and do it, and yeah, you lose money on it, but there's no that's not marketing. Marketing has a lot of elements to it. Pricing is one of them, but so is promotion, so is advertising, so is the product. I mean, all the P's that you learn when you study marketing. Why do we have to have a blunt lever called pricing in order to move volume? Why can't we communicate better? The way, use Apple as a good example. Apple doesn't aggressively cut price to move volume. They communicate. Why can't we do that?
Okay. Oh, so thank you guys. That's amazing conversation. It feels like we're going back to this conversation we've had many, many times in the past. Just want to thank Gary and all the other speakers that were here. Appreciate it very much. It's been 2 hours, and we're going to close this out today. Appreciate everybody joining us. Please follow the speakers and join us every Tuesday. We have this space. Thanks, everyone. Bye-bye.
Thanks, everyone, for coming.